Yeah. Hello students. Hope everyone is doing well and welcome to Vijay Mohan IAS Academy, and this is Vijay Mohan. So as you know that we started a TSPSC Group 1 video course as well as test series, and exclusively and we have started it exclusively for English medium. So in today's class we will be dealing with the first chapter of Indian economy and development, and we will be seeing in the first chapter we will be seeing some of the aspects related to national income, concepts and measurement of national income. Before going into the details of this particular issue, I want to tell you that in this course, throughout this course, as we are concentrating on mains, economy mains, so basically we will be concentrating on the mains aspect, because I'm not going to tell you what are the facts oriented or what are the related facts to this subject, and when national income has been started, or who are the prominent players who started calculating national income, because these are not relevant for your mains point of view. So my framework will be that every issue or every word or every sentence that I am going to tell you will be related to mains, because as far as your selection, final selection in the group 1 is concerned, as there are no as you know that there will be no interviews, the mains performance in the mains examination is going to be a very crucial factor for your final selection. So in a way, and in fact the economy paper is going to be a very vital factor for your final development. Why? Because in economy chapter, if you see the chapter, the paper is complex in nature, because they have included Indian economy and they have included Telangana economy, and moreover they have already included environment and development and environmental related issues also. So if you see the complexity of the economy paper is increased as far as Telangana group 1 economy is concerned, and moreover if you integrate this paper with the essay paper, then there is more scope for scoring more marks. So keeping all these facts in mind, I will be going through the mains aspect, and I will be telling you that what are the areas that you need to focus in each chapter, and what are the probable areas that you can expect from those topics. And while going through the concepts, I will be taking you through the previous year questions, and I will be telling you what are the areas that the examiners had focused in previous years, and I will be giving you or telling you some of the practice questions. So basically with this approach you will be able to understand that what are the important areas that you need to focus as far as your mains exam is concerned. So as part of this course, in the first lecture, that we will be focusing on the national income and related concepts and measurement of the national income, right? So in this video we will be specifically focusing on national income, concepts and measurement of national income, and also nominal and real income, right? Okay. See, See, you can see some of the sentences I made it in a red mark. So why? Because these are the areas that previously some questions have been asked in TSPSC group 1 as well as APPSC group 1. If you observe the last you can say last 5 papers or last 5 exams of TSPSC and APPSC, like 2008, 2011 or 12, 2016 and 2017 and 2020 of APPSC, you can find that there are questions being asked on various concepts of national income, then various approaches to measure the national income, then problems in measuring national income, then what are the limitations of GDP in representing welfare of the people. These are the areas where they have stressed questions as far as this topic is concerned. And these areas, that necessity of measuring national income and recent changes in measuring national income in India and factors affecting national income in India, these will be the probable areas where there is a probability of asking mains questions, right? So what is basically national income accounting, right? National income accounting refers to the methods or techniques which are used to measure the economic activity in a national economy as a whole. So national income accounting basically refers to the methods or techniques which are used to measure the economic activity in economy as a whole, right? In an economy, households buy goods and services from the firms, and firms use their revenue from sales to pay wages to workers, rent to landowners, and profit to farm owners. So these wages, rent, and profit, these are all called as factor payments. These are all called as factor payments. So in a simple circular flow, if you see in a simple circular flow, there will be two aspects in an economy. One aspect is households and another aspect is firms. So in a simple economy, there will be a flow between the households and firms. From households, services will be going to the firms, and firms will supply goods to the household. So this is the simpler circular flow of economy. And GDP equals the total amount spent by the households in the market for goods and services. So GDP is nothing but it equals to the total amount spent by the households in the market for goods and services. This is the simplest way of defining GDP, right? Okay. Then from the firm's perspective, if you see from the firm's perspective, GDP equals to the total wages, rent, and profit which is paid by the firms in the market for the factors of production. So if you see the definition of GDP from the firm's perspective, then it equals to the total wages, total rent, and profit, and also interest, which is also one of the factors of production. GDP equals to these factors of payment, right? So this is basically basic definition you have to remember as far as your national income accounting is concerned. And what is the necessity of measuring national income? So basically, what is the use or what is the significance of measuring national income? Maybe tomorrow they will be asking a direct question that explain the significance of measuring national income to reflect the welfare of the people or to reflect the economic activity of India. So if you see what is the necessity of measuring national income, comparative perspective. If you need to compare two countries or two economies in the world, then you need to have a certain idea about how much GDP or how much national income is being generated. And if you want to purchase the two countries and how they are performing, whether they are developed countries or developing countries, or they are laggard or they are lagging in their economic activity, then you need to have some assessment, some quantity. Then it is possible through calculating national income. Now that is the significance of measuring or calculating national income. So comparative perspective. Next, for business decisions, for taking any business decisions, like you can say that manufacturing decisions or export oriented decisions, this measuring national income is important as far as taking any business decisions and other decisions are concerned. Now policy formulation. Now this is also one of the important aspect as far as measuring national income is concerned. Why? Because if you see that recently Indian government is focusing on pushing manufacturing sector and increasing the contribution of manufacturing sector from 15% of GDP to 25% of GDP. See, if you want to push or if you want to give incentive to certain sector like manufacturing or agriculture sector, or if you want to form a policy on that, then you need to have an idea about how manufacture is being performing and what is the income being generated from the manufacturing sector, and what are the sectors that are lagging as for generating or in generating income. Then only you will having a fair idea to formulate a formulate a conducive policy or formulate an optimal policy as far as that sector is concerned. Now policy evaluation, This one is also important. To evaluate the policy also, you need to have certain idea about measurement of national income. So next, budget analysis. So if you want to have a fair idea about budget analysis and which sectors need more support and which sectors need a little bit of budgetary support, then you need to have an idea about national income, how different components or how different sectors are performing. Then that is very important as far as measuring national income is concerned. Then national expenditure priorities, this is also very important. See, if you want to know that what are the priorities as far as national expenditure is concerned, what are the areas that coming 5 years or 6 years that government needs to expend. For example, for instance, that since last 2 decades or 3 decades, government is focusing more on infrastructure spending, and government is focusing on inclusive growth. Government is also focusing on sustainable development. So if in order to take decisions or give priority to the expenditure of national expenditure, then you need to have an idea about how national income is being generated and what are the areas that you can get more revenue and what are the areas that you can spend more, so that economy will go into a development mode. So this is the significance of measuring national income, that you need to have certain idea about the national income to derive particular policies, to evaluate particular policies, to spend, to have a correct expenditure priorities as far as national economy is concerned, right? Then we will move to the next aspect. Now see the various concepts of national income. This is very important aspect as far as your exam is concerned, MAINS exam is concerned. Why? Because there is already one previous question being asked on various concepts of national income. We will see that question. See, basically there are many aspects of many concepts of national income, like GDP, then GNP, then NDP, then NNP, then personal income, then personal disposable income. These are all the prime issues or prime concepts of national income, right? So if at all there is a question on what are the various concepts of national income, aspirants has to do that. Basically they have to define that particular aspect and they have to write 2 or 3 points on that. Then if any mathematical or any formula representation is there, you have to write that formula representation also. Then your answer will get value addition with that with the way that you are writing, right? So we will see what is GDP, right? GDP or gross domestic product refers to total market value of all the final goods and services produced in an economy in a given period of time. So you have to lay stress here that it refers to total market value, right? And of all the final goods and services. Here you have to concentrate that, you have to emphasize that the goods are final in nature, they are not intermediary in nature. So you have to take the value, or you have to take the value of the final goods and services rather than the intermediary goods. If you take the intermediary goods into account, then there is a possibility of what do you say, double accounting. So to avoid this aspect, you need to take into account only the value of final goods and services produced in an economy in a given period of time, right? Now GDP includes production within a country by all producers, whether it is citizens as well as foreigners. Now you have to emphasize on within a country. GDP includes production within a country. So GDP is basically focusing on the product where it is produced rather than who it is produced. So it is having a geographical limitation, right? This aspect you just try to remember. Then GDP equals to C plus I plus G plus X minus M. I'll explain what are those. C is nothing but consumption or consumption of households, I is investment, and G is government expenditure, and X minus M is net imports, that is imports minus exports, right? So this definition is basically from the point of view of households. This definition is from the point of view of households. Now if you consider from the point of view of firms, then the definition of GDP is W plus P plus R plus IN. What is this? These are the factor payments. W equals to wages, right? P equals to profits, P equals to profit, R is nothing but rent, and I is nothing but interest payment. So while GVA, now this is from the perspective of firms. Now while GVA, that is gross value added, gives a picture of the state of economic activity from the producer side or supply side, the GDP gives the picture from the consumer side or demand perspective. This is the basic difference between GVA and gross domestic product, that is GDP. Now if you see gross national product, GNP. See, GNP is an estimate of the total value of all the final goods and services turned out in a given period by the means of production owned by a country's residents. And GNP considers all products produced by the citizens of the country within the geography as well as abroad. So this is the basic difference between GDP, gross domestic product, and gross national product, because GDP is having a geographical limitation. However, GNP does not have any geographical limitation, right? So this is the basic difference that you need to focus. GNP focuses on who produced the product. See, GNP focuses on who produced the product. However, GDP focuses on where the product is being produced, right? GDP is about where production takes place, and GNP on the other hand is about who produces them, right? If you see one example, see, I have included examples also for your understanding. See, basically Samsung is a South Korean based firm. When it opens up a production utility in India, value of output from that utility is added to India's GDP. Why? Because the unit is being produced within the geographical limits of India. That's why it is being included in while calculating India's GDP, but it is not added while calculating GNP of India, right? Similarly, when Indian companies such as Infosys or TCS are producing services in the US, the value of those services are not added in the Indian GDP, but they are utilized while calculating the Indian GNP. Why? Because those services are being produced outside the geographical boundaries of India, so it is not being included while calculating the GDP. However, while calculating the GNP, it is being included in the Indian GNP, right? Now if you see, GNP is equal to GDP plus net factor income from abroad. What is this net factor income from abroad? That is nothing but exports minus imports, or imports minus exports, right? Yes. And if you observe in India's case, see here, in India's case, GNP is lower than its GDP, as net income from abroad has always been negative in India. Because of this, GNP is lower than its GDP, right? Now you can see net national product, NNP. If you deduct depreciation from the GNP, then the measure of aggregate income that we obtain is nothing but net national product, right? If you remove depreciation from GNP, that is gross national product, you will be getting net national product. And net national product at factor cost is nothing but national income. And national income is equal to NNP at market price minus indirect taxes plus subsidies, right? At factor cost, you are removing NNP at market price from, you are removing indirect taxes from NNP at market prices, and then you are adding subsidies to the factor cost, then you will get the national income. Just try to remember these formulas. These are useful while writing your mains answer. Now see, factor cost is taken as taxes accrue to the government, and it is only the factor cost that accrues to the factors of production. Why we are taking factor cost? Because factor cost will give you the real picture as how much amount or how much factors of production are going into making or bringing one product into the market. And that is why we are using the factor cost, so that you will get a clear picture about what is the amount that has been invested to produce one unit of output, right? Then we will see one of the other important aspect as far as national income is concerned, that is personal income. Sorry. Yeah. See, personal income is equals to national income minus undistributed profits in the economy, undistributed profits in the economy, and net interest payments which are made by households, and corporate tax minus corporate tax plus transfer payments to the households from the government and firms. Here you observe that certain components we are subtracting from the personal income and certain components we are adding it. Now if you see undistributed profits, that in an economy there the profits which are being generated and which are still not being distributed, that doesn't comes under the, or they doesn't constitute the personal income of the citizens. So we need to remove those undistributed profits. Similarly, we need to remove corporate tax, and however we have to include transfer payments which are being given in the form of subsidies to the households or to the firms from the government. Then you will get the whole picture of personal income. However, even after doing this calculation, the income which is being with the person is not at his discretion to dispose. That person is not having the discretion to spend that amount. For that, to get the real picture of the disposable income of a person, then we need to calculate personal disposable income, and this is the personal disposable income is the amount which a person can spend at his discretion. So this is the important aspect as far as personal income is concerned, and personal disposable income is nothing but personal income minus personal tax payments on non-tax payments. See, the personal income which is with the citizen also includes tax payments on non-tax payments, and this tax payment and non-tax payments he has to ultimately pay to the government authorities. If you remove the personal tax payments and non-tax payments, then whatever amount the person is having, then it is with his discretion, or he can spend that amount with his discretion. That is the real personal disposable income that a person is having, right? Now if you see, another important aspect which is given in your syllabus is that real GDP and nominal GDP. Maybe this is also important. Maybe there will be a direct question tomorrow that what is meant by real GDP and nominal GDP, and what are the differences between real GDP and nominal GDP. So that is the reason why I placed it here. Nominal GDP refers to the current year production of final goods and services which are valued at current year prices. See, nominal GDP is nothing but the GDP which is calculated at current prices, right? And real GDP on the other hand refers to the current year production of goods and services which are valued at base year prices. Such base year prices are constant prices. So real GDP is calculated by taking one base year. So basically real GDP accounts for inflation, that is takes into account inflationary aspect. However, the nominal GDP doesn't takes into doesn't take inflation into account. So sorry, basically real GDP is a much better way to calculate the GDP, because in a particular year GDP may be bloated up because of high rate of inflation in the economy. For example, if you see here what he is saying, that real GDP is a much better indicator as far as your evaluation of GDP or to get the correct picture of economy. Why? Because take for an example that in year 2010 100 apples has been generated, right? And the cost of one apple or 100 apples, you say that 100 rupees, right? And in year 2020 50 apples has been produced, 50 apples have been produced, and the cost of each apple you consider it as 5 rupees, then it will become 250 rupees. If you see plainly, you can say that the GDP in 2020 has been more compared to 2010. However, if you observe, the production, the output is less in 2020 compared to 2010. So here, if you consider the nominal GDP, then it is giving a wrong picture. So that is the reason why real GDP is a correct or a right indicator as far as evaluation, as far as evaluating your GDP is concerned, right? Okay, GDP is a, yeah. So real GDP therefore allows us to determine if production increased or decreased regardless of changes in inflation and purchasing power of the country. So real GDP gives you the correct picture that whether there is any increase in the production or decrease in the production regardless of inflation or purchasing power, right? And I have given some of the prices or different types of prices for conceptual clarity. Just go through this: what is market price, what is the factor cost, what is the basic price, and related formulas I have given, right? You can just go through these things so that you will get conceptual clarity. Now see the previous question which is being asked on the on the issue. See, this is basically asked in TSPSC 2016 Group 1, and the question is: explain the various concepts of national income. As we have discussed already, explain various concepts of national income. What are the limitations of GDP in representing welfare of people? సో జాతీయ ఆదాయపు వివిధ భావనలను వివరించండి. ప్రజా సంక్షేమాన్ని ప్రతిబింబించడంలో స్థూల జాతీయోత్పత్తి యొక్క బలహీనతలు ఏమిటి? సో బేసికలీ ద క్వశ్చన్ which is combination of two subparts is asking what are the various concepts of national income. This is first component. Then what are the limitations of GDP in representing welfare of the people? This aspect we will see as we go as we move forward, right? So these are the kind of questions that are being framed from the national income accounting, and that is the reason why I explained you all those things. Then I tried to put one practice question, try to practice it, that what is the meaning of personal disposable income, PDI, and how is it different from personal income? Try to practice this question, right? And as far as the syllabus is concerned, one of the important aspect for your exam is what are the recent changes that are being incorporated in measuring national income in India. How it has been became somewhat comprehensive compared to the previous method of calculating national income in India. Maybe there will be a tomorrow there will be a question that, so explain the recent changes which are incorporated in measuring in measuring national income in India, or comment on the recent changes in measuring national income in India. So that is the reason this is also one of the important aspect, right? We will see briefly. The Central Statistics Office in January 2015 released the new and revised data of national accounts affecting two changes. There are basically two important changes as far as calculating or measuring the national income is concerned. What is that? The base year was revised from 2004-5 to 2011-12, right? This time the methodology of calculating the national accounts has also been revised in line with the requirements of the System of National Accounts SNA 2008, which is an internationally accepted standard. So to make our measuring or to make the calculation of national income of India up to an international standard, they changed the methodology of calculating the national accounts equals to the or in line with the requirements of the System of National Accounts SNA 2000. What is the System of National Accounts 2008? It is internally accepted standard of measuring national income. So these are the basic changes, or two important changes being done as far as measuring the national income of India is concerned. Now we will see other changes. The growth rate will now be measured by GDP at constant market prices, which will henceforth be referred as GDP, and this is why this has been changed. This is the international practice, and earlier the growth was measured in terms of growth rate in GDP at factor cost at constant prices. So to reflect the real picture, they have changed or the GDP measurement, that now onwards the GDP will be measured at constant market prices instead of GDP at factor cost at constant prices. This is one of the significant change, right? And another change is that the sector wise estimates of gross value added GVA will now be given at basic prices instead of factor cost, right? Earlier they used to give GVA at factor cost, now GVA they are giving at basic prices, right? Next, now they are using use of MCA 21 database, which is the annual accounts of companies filed with the Ministry of Corporate Affairs. So in the new calculation methodology, they are using the database of MCA 21, and because of this database, what is the effect that it is having? It will expand the coverage of corporate sector both in manufacturing and services. So as far as this database, the inclusion of MCA 21 database is concerned, it is going to expand the coverage of corporate sector both in manufacturing and services sector. Because of this, the reflection of real economy, that economic activity, the real economic activity will be reflected as far as calculation of national income is concerned. And also the database for manufacturing companies will help account for activities other than manufacturing undertaken by these companies. So this database will also include manufacturing and other sector also, so that you will get a real picture of the economic activity. Then comprehensive coverage of the financial sector by inclusion of information from the accounts of stockbrokers, stock exchanges, asset management companies, mutual funds and pension funds, and the regulatory bodies like SEBI, PFRDA and IRDA. Earlier these things, or these financial sector, or the accounts of these regulators and other financial sector institutions has not been included. So with the inclusion of these institutions and these regulatory bodies, information of these regulatory bodies, the correct picture of economic activity can prevail, right? Then there is an improved coverage of activities of local bodies and autonomous institutions, covering around 60% of the grants or transfers provided to these institutions. So these are all the important changes that are being introduced after 2015 in measuring national income accounting. So if they ask the question that what are the changes that are being incorporated in measuring the national income, then you can specify 4 or 5 points of this, then your answer will be having more value addition compared to other answers, right? Okay. Now see, I have tried to add one practice question, that define national income. You need to define national income, then discuss the recent changes which are made in measuring the national income of India. జాతీయ ఆదాయాన్ని నిర్వచించండి, భారతదేశ జాతీయ ఆదాయాన్ని కొలిచే విషయంలో ఇటీవల జరిగిన మార్పులను చర్చించండి. So try to practice this question. What is this question? Define national income and discuss the recent changes which are made in measuring the national income of India, right? Now I just added for your convenience what is the concept of gross value added. Just go through it. What is the difference between gross value added and gross GDP, right? So I will briefly go through it so that you will get some idea. So gross value added is defined as the value of output less the value of intermediate consumption. So they are removing intermediate consumption from the final product or final goods or service. So value added represents the contribution of labor and capital to the production process. So it is representing the contribution of labor and capital to the production process, right? And the GVA at basic prices will include production taxes and exclude production subsidies available on the commodity. So the GVA at basic prices will include what it includes? It includes production taxes at basic prices. However, at basic prices it excludes the production subsidies available on the commodity, right? On the other hand, GVA at factor cost, you need to observe the differences between basic prices and factor cost, because there is a possibility they might ask what is the basic prices, what are the factor cost, what are the market prices, and what are the basic differences between these costs, right? GVA at factor cost includes no taxes and excludes no subsidies. That means to say that they doesn't include the taxes, however they include the subsidies, right? And GDP at market prices, it includes both production and product taxes and excludes both production and product subsidies. In market prices, GDP at market prices, it includes both production and product taxes. However, it excludes both production and product subsidies. And there is a basic difference between production or product taxes or production and product subsidies. See, if you see production taxes, examples of production taxes are concerned, we say rent or land tax. These are the examples of production taxes. However, because this production taxes doesn't increase or doesn't depend on the how much output you are being produced, they are constant even if you produce 1 unit or even if you produce 100 units. So that is the basic aspect of production taxes. Now, however, product taxes means these taxes are imposed on per unit of output. For example, VAT, GST, right? All these taxes are product taxes, where it is imposed on the individual output or individual product, whereas production taxes doesn't depend or doesn't take into consider the volume of the goods that you are producing. They are constant even if you produce 1 good or even if you produce 100 goods, right? This is the basic difference for production and product taxes. Now we will see. Now, when the value of taxes on products less subsidies on products is added, the sum of value added for all resident units gives the value of goods, value of gross domestic product. See, this is another way of defining GDP, that when the value of taxes on products excluding the subsidies on products is added, the sum of value added for all resident units gives the value of GDP, right? Now the above concept is summarized in the following equations. You just go through these equations and try to remember, if at all, GVA, what is the GVA at basic prices, GVA at factor cost, and what is the GDP. See here, GDP is nothing but summation of GVA at basic prices, GVA at basic prices plus product taxes minus product subsidies, right? So in the next class we will see about various approaches to measure the national income. What are the approaches, what are the methods, right? Thank you.